Imagine a small group of men meeting in secret on a private island off the coast of Georgia in 1910. Their mission? To quietly design the most powerful institution in modern history, one that would control the value of money, the flow of credit, and ultimately, the destiny of nations. That night, under flickering gas lamps and over cigars, the blueprint for the Federal Reserve System was born. But here's the question: who really owns it? And more importantly, who does it truly serve? Because the answer isn't as simple as the government. In fact, it might be the biggest illusion in modern economic history. To understand this story, we have to go back to the chaos before the Fed. The late 1800s was a time of financial panic, bank runs, wild speculation, and shattered confidence. The US had no central bank. Money was tied to gold, yet constantly manipulated by private bankers. Every few years, markets crashed, people lost their savings, and fear spread like wildfire. After the panic of 1907, when J.P. Morgan himself had to personally bail out the American banking system, political leaders realized something had to change. But instead of giving power to the people, they gave it to an idea, a system that would pretend to be public yet act like a private corporation. The Federal Reserve Act of 1913 was passed on Christmas Eve, when most Congress members were home with their families. It created 12 regional Federal Reserve banks, each technically owned by private member banks in their district. These member banks hold stock in the Fed, not the kind of stock you trade on Wall Street, but stock that gives them influence, dividends, and a voice in governance. The Fed, by design, is a hybrid, public in purpose, private in power. The Board of Governors, appointed by the President, gives the illusion of accountability. But beneath that layer, the real control lies with the banking system itself. Think of the Fed as a puppet master, invisible strings controlling interest rates, inflation, and the cost of debt. When the Fed prints money, it doesn't print physical cash. It creates credit out of thin air. That new money enters the system through the banks. The banks lend it, profit from it, and expand their reach. It is not the government borrowing from itself. It is borrowing from a system owned by those it is supposed to regulate. Imagine a casino where the house always wins because the house prints the chips. In 1933, during the Great Depression, President Franklin D. Roosevelt took the U.S. off the gold standard for citizens, effectively giving the Fed total control over the money supply. By 1971, Richard Nixon finished the job by closing the gold window entirely. Now money was no longer backed by anything real, only by trust. The Federal Reserve's paper became the world's reserve currency, enforced by U.S. power and the global petrodollar system. But when money is based on belief, control over that belief becomes everything. Over the decades, the Fed has grown from a lender of last resort to the beating heart of global finance. When Wall Street panics, the Fed steps in, not to save Main Street, but to save the system itself. In 2008, as the financial crisis erupted, the Fed printed trillions, buying toxic assets and bailing out banks too big to fail. The irony? The very institutions that owned the Fed were being rescued by it, using money created by it, all while ordinary citizens bore the cost through inflation and debt. That's the silent tax of modern finance. You don't vote for it, you don't see it, but you pay for it every single day. So, who owns the Federal Reserve? Officially, the Fed belongs to the public, but the deeper truth is that it belongs to the system, a self-reinforcing network of banks, corporations, and governments that depend on endless debt to survive. The Fed's shareholders are the largest banks in the country: J.P. Morgan Chase, Citigroup, Bank of America, Wells Fargo, the same institutions that dominate global finance. They receive annual dividends guaranteed by law. They help choose regional Fed presidents. And they benefit most when credit expands. It's a feedback loop where power fuels profit and profit fuels power. Now here's the paradox. The Fed doesn't print money for free. Every dollar created is a debt owed to the system that created it. The US government pays interest on those dollars, effectively renting its own currency. This is why the national debt never truly shrinks. Every stimulus, every bailout, every quantitative easing, it all feeds a machine that must keep growing or collapse under its own weight. The moment the system stops expanding, the illusion breaks. Let's step back. Picture money as blood, and the Fed as the heart pumping it through the veins of the global economy. But over time, that blood has become thinner, diluted by debt, speculation, and manipulation. The Fed's power lies not in what it owns, but but in what it controls, your belief that its notes mean something. Without that belief, the entire structure falls apart. That's why transparency is resisted, audits are limited, and its inner workings remain shrouded in mystery. Because once people understand how it truly works, they start asking dangerous questions. And here's the twist. The Fed isn't just an American story anymore. Its policies ripple through the entire planet. When the Fed raises rates, economies from Argentina to Bangladesh suffer. When it prints trillions, asset bubbles form in London, Shanghai, and Dubai. Global markets live and die by decisions made in a closed boardroom in Washington. DC, the world's most powerful institution, doesn't command armies, it commands credit. And through that credit, it commands behavior. Every empire in history has had its financial priests, from Roman money changers to British central bankers. The Federal Reserve is the modern temple of money, where faith replaces gold and policy replaces accountability. And yet, every temple eventually falls, not by force, but by disbelief. When people stop believing in the value of money, or the legitimacy of the system, history resets. Today, the cracks are visible. Rising inflation, record debt, and a widening wealth gap are symptoms of a system stretched to its limits. The Fed insists it's independent, yet every crisis ties it closer to the government, the markets, and the very institutions it's supposed to oversee. Independence has become a performance, a mask worn by a system that fears transparency. So maybe the real question isn't who owns the Federal Reserve, but rather, who does the Federal Reserve own? The answer, almost everyone. It owns your mortgage rate, your job market, your national debt, your savings account, your sense of financial stability. It owns time, because it dictates the price of tomorrow's money. When you trace the story of the Federal Reserve, you trace the story of control, how a nation. So wealth was centralized, how money became digital faith, and how democracy quietly outsourced its sovereignty to a system built on trust, secrecy, and debt. And once you see it, you can't unsee it. The lesson? Power doesn't always wear a crown or carry a gun. Sometimes it hides in balance sheets, interest rates, and elegant acronyms. The Federal Reserve isn't evil. It's efficient. It's the evolution of empire by economic means. But like all empires, it will face a reckoning when its foundation, belief, begins to crack. Because history's greatest truth is this: no system that prints money forever can last forever. The question is not if it breaks, but when. So, who really owns the Federal Reserve? And when that illusion finally ends, who will own you?